please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There's one theme that continues to stand tall in this market. It has to be the entire graphite and related input industries story. So we were discussing some of these stocks like Phillips Carbon a while back, Goa Carbon, Phillips Carbon, Graphite India, HEG, even Himadri Chemicals, which does make coal tar pitch. Again, that's an input that goes into the graphite industry. So all of these stocks are up and away today. Ambareesh Baliga joins us into the conversation now. Ambareesh, we were just discussing this. I mean, these are very niche companies, and I mean, entry and exit, I guess, is of paramount importance because the stocks are up between 700 to 1000%. Would you pick anything right now specifically?
In fact, I had picked up HEG possibly at levels of 165 just about, I think, 15 months back when no one was really looking at it. And even in my wildest imagination, I couldn't have imagined levels of even 1,000 plus. Forget it, it's already 2,500, 600 odd. But even those levels I couldn't imagine at that point of time when I had recommended the stock. So yes, I mean, exit is important because I exited this stock early. But I mean, my suggestion to those who are still holding on to the stock at these levels would be clearly to book out to a certain extent, get your original shares at least free, because at the end of the day, this is a cyclical industry. And we have seen down cycles when most of the stocks were there in dumps. I mean, a stock like Graphite was in two digits, closer to 60, 65. So such things can happen again. So when the time is good, at least take some money off the table.
Okay, all right. That's as far as graphite is concerned. Ambareesh has been one of the lucky few who's picked up HEG so low. By the way, L&T is trying to make a bit of a move. In a minute, we should try and play some of the management's commentary, not just on budget expectations, but also what they said about the company. They did sound fairly optimistic today. They said that execution is where the focus is. They're not expecting too much of, big ticket bidding now. It's more about execution of contracts that have already been bidded out. They do say that the fourth quarter should be even better as they are looking at more contracts in that quarter. We were in conversation with the group CFO at L&T, R. Shankar Raman. Take a look at what he's expecting from the budget and, of course, outlook on the company.
I wish the finance minister walks the talk in terms of reducing the corporate tax to 25% to every assessee. If not for the tax rate coming down to 25%, I would expect them at least to look at MAT, because today the rate of MAT is so very close to the rate of effective tax that most of us pay that it ceases to be the benefit that it once was thought to be. And secondly, I think if infrastructure is the way to go forward, I think some of the benefits that are there for investments in infrastructure sector needs to be restored. For example, contractors who build the infrastructure assets are not given the benefit of 80IA, which a developer gets today under the tax regime. Now, these are important tweaks that the finance minister can make. Last year, if I remember the numbers right, including railways, about 2.2 lakh crore was allocated, of which about 97,000 crores was for the transportation infrastructure. The government resources are stretched because of the so many diversions, deviations to the plan that was dished out in last February. But the fact is, if they are able to meet their commitments of 1 lakh crore incrementally, I think we would take a big step forward. My assessment is about 75 odd thousand crores as against the 97,000 crores would get spent this year, and as against 2,21,000 crore, possibly about 1,60,000, 1,70,000 crore would get spent.
Okay, that's L&T as far as budget expectations are concerned. They, on their own business, said that Q4 should be even better in terms of more order bookings. But the market continues to be as flat as it can be. Anuj, what is the takeaway from today's action? I mean, on the mid-cap side, we're not getting that sense of a big flurry, though the index is looking like it's up 0.7%.
Clearly, Surabhi, today could have been a bad day, but the fact that, the mid-cap index is going home with gains is telling you that maybe, the scare that you had, maybe that's coming to an end, that the poison was out with that just one-day fall. But I think this correction over the last two or three days on Nifty or this correction or consolidation is telling you that maybe the market wants to bide its time before it breaks out. Earnings season starts now on 9th, right, with South Indian Bank's numbers, and on 12th, of course, we'll have Infosys's numbers. This time the earnings season is going to be good because base effect will be there. So I don't know. I mean, the only problem I have is that the market is making a bit of a meal of this 10,500 to 10,550. Whether that's a precursor to a decent correction or whether it's just buying time ahead of earnings season, I think we'll find out. But I think the mid-cap action today should enthuse bulls once again because it looked like a significant correction was happening, and that's got stopped at least for now.
Okay, well, that's the market today. Ambareesh, your thoughts on metals once again, because if there's one sector that kind of managed to buck the otherwise sluggishness, it again was metals. Fresh purchase ideas 2018 after the rally that we've already seen.
Fresh purchase at this point of time in metals I would possibly avoid because I was picking up metals in 2015. Tata Steel was recommended at that point of time along with Hindalco. But at these levels, I'll not really recommend buying fresh into metals. But again, something connected, ancillary is what I was recommending some time back. A stock like NMDC because ore prices had not moved up, and it was illogical that you have the steel prices moving up and the ore prices were not moving up. So that was an opportunity possibly in the last 4 to 5 months, which has played out well, but I think it can still play out further. So even at levels of about 150 or so, I think NMDC could be looked at. I'll not be surprised if you see levels of about 180, 190 for the stock.
Okay, just want to pull out the intraday chart of Kajaria Ceramics. Just see, in fact, a lot of these, economy-facing stocks, domestic stocks, budget-focused stocks are doing well towards the end of the day. Kajaria Ceramics right now breaking out, up about 3.5%. Ashwini, any thoughts here on Kajaria Ceramics?
Basically, a lot of consumption stocks are moving up. Now you can relate everything to the budget. But overall, Kajaria Ceramics has moved quite sideways for a bit. We need to get past this 750 before we can say look at 825, 830. So far still sideways, nothing really happening here.
Okay, Sudeep, you have thoughts here on Kajaria Ceramics or any of the other ceramic stocks?
Well, Anuj, all these economy-facing stocks are doing well, and we strongly believe that with the government's focus on housing for all and affordable housing, which there is a definite time target as well, they will continue to gain momentum. Also, remember the GST gives the organized sector a significant leverage over the unorganized players. So companies like Century Plywood has been a favorite for us. We have been bullish on Kajaria as well, but maybe the valuation in Kajaria has reached a level where we are not really comfortable, but Century Plywood is definitely a buy at current levels.
Okay, by the way, take a look at what's happening to this one stock, United Breweries. The waves of buying that's kind of hit the stock in the last 15-20 minutes of trade. It's, soaring away to the day's high. What a spike over there, 5.5% up. And it's not alone. Yes, there's buying on a Radico Khaitan. There's also some buying on United Spirits that's picked up. We actually did catch up with the management, sounding extremely optimistic. We'll play out those bites in just a minute. But before that, Mitesh, your thoughts? Breweries is getting happy and high.
Yeah, in fact, Radico could be very interesting if it starts getting past 300. That's one stock which I've been tracking very closely. And that will be a fresh swing breakout. Then it will be a buy with a stop at 290, and I think 330, 340 could happen here easily.
Okay. Ashwini, your thoughts on United Breweries? I know you are a Scotch person, not a beer person, but the way that one has moved, United Breweries?
See, the important issue on both United Spirits and United Breweries, again, that they are coming out of fairly significant consolidations. For last 2 years, I think United Breweries had a downside of 700, upside of 950. Now that consolidation is expanding. So today is the first buy day post that large rally. I think from here you could easily see levels 1190 and then maybe even 1400 on UBL.
Now, if you're a beer consumer and you consume United Breweries products, and if you live in Maharashtra, you'd know about this whole excise issue that had been plaguing the sector. So, Shekhar Ramamurthy, MD of the company, today clarified that those issues are behind the company. Maharashtra is moving just fine, and sales actually in other parts of the country are also looking very good. Take a look.
We clearly anticipate volume growth of mid-single digit for the industry, 6-7% for the industry, and we have said we will grow ahead of that. Now, what we foresee for the next 12 to 15 months is a similar trend, because growth is not even across the country. You know, there are parts of the country, for example, Telangana and Andhra, are showing very strong double-digit growth. But at the same time, there are Bengal and Maharashtra have not shown such growth. Last 2 months, in a very important state of Maharashtra, we actually did very little business, because from end October till end December, we didn't have clarity on how the duty on beer would pan out. That clarification came only in December. So Q3 will be a little muted, particularly because of the impact of Maharashtra. Our super premium brands like Ultra and Heineken and Max are growing very strong double digits. So the top end of the market, there is a lot of growth, there is room for competition. And, you know, as a market leader, we have to respect the fact that there will always be competition.
Okay, so liquor and beer is doing well today. Rice stocks are doing well today, as are fertilizers. A couple of mid-cap themes that are playing out there. Sudeep, any thoughts on the fertilizer rally or rice for that matter?
Well, Surbhi, fertilizer, we have been bullish for some time. You know, the direct benefit transfer is getting completed as far as fertilizer is also concerned. This was one sector which still had significant trouble because of the subsidy issue. Not that the subsidy was a problem, but the collection of subsidy from the government used to take about 6 to 8 months. There was a strain on working capital of all the fertilizer company. With DBT, I think this entire issue is getting taken care of. So fertilizer companies can look forward to better working capital management. Also, otherwise, I think considering the focus of the government on agriculture, which is bound to even increase in the forthcoming budget because of the ensuing elections, I think fertilizer companies are going to have a good run for the next 1.5 years. So we should look at fertilizer companies like maybe an RCF or a Coromandel International. These are good buys at current levels.
Okay, by the way, just to look at the stock of KPIT Tech, we were talking about, you know, flagged this stock yesterday as well in the morning as one of our top 10 stocks. A stock breaking out of a you know, multi-year bear market, and that stock is ending at the high point right now, 5% higher on that KPIT Tech. On the other hand, Wipro, which has had a big run all through last year, is seeing some profit taking today. Mitesh, thoughts on Wipro and KPIT?
See, in fact, I like both the stocks. KPIT is something, you know, which appears to be getting into a much longer term uptrend. The highest ever the stock has gone on monthly charts is about 215, 220, and I think it's heading towards the zone. Most likely this time we'll be able to cross it. So I think hold on to it. I think if it comes slightly lower, closer to about 185, 186, would again become a fresh buy. Wipro, I think also, you know, has broken out of a good levels of around 305, 304 and went to about 320. I think appears to be giving some kind of a mild pullback. I think around 305, 306 would be a good buying opportunity. Keep a stop below 300. I think 320 should be revisited again, possibly crossed.
We were discussing this with you yesterday on KPIT. Midcap IT, in fact, has done well, right? I mean, Hexaware, Tata Elxsi, some of these stocks. Which one looks best to you? Okay, we'll get to Ashwini in a bit. But Sudeep, your thoughts on midcap IT?
Well, Anuj, I think we've been bullish on a couple of mid-cap IT names like Persistent. This is one company which has been doing all the right things in terms of getting into the emerging areas in the technology sector, like you know, big data analytics, cloud, and other areas. And they have been gaining business. So Persistent is a buy, definitely. We look at ₹1,000 price target in Persistent. Apart from that, we like Mindtree, we like Emphasis. I think both these companies can be looked at current levels. Again, they are getting into the right areas and they are a bit advanced compared to many of their peers as far as entry into these segments are concerned.
Okay. Ashwani, same question to you. You have been positive on some of these mid-cap IT companies. Between KPIT, Hexaware and Tata Elxsi, which one looks the best?
See, I would think Tata Elxsi, because KPIT reached these levels once and suddenly came out with a profit guidance cut, etc., and fell very sharply. So if you ask me, I think Sonata, Hexaware, Tata Elxsi are much better buys than KPIT, etc. But since mid-cap IT is doing well at the moment, everything is likely to run.
Speaking of everything that's running, L&T is deciding to end the day in style. 52-week high on the stock, 1282 and counting. It's the last sort of 10-15 minute spurt that now it seems to be enjoying. There you go, 1282. Ambareesh, L&T.
No, I mean, L&T is like an evergreen buy because, and at the same time, since the last couple of months, in fact, the last 3 or 4 quarters, we have seen that the government also has been, quite proactive as far as infra is concerned, and you're actually seeing ease of execution at the ground level. Fund flows are superb. So I think, there should be nothing really stopping, this sector overall, and I think L&T would be one of the major gainers there. So even at the current levels, despite the sort of a move which we have seen today, I think this is a stock to be bought and more as a SIP.
Okay, just about 2.5 minutes left for markets to close. So let's just do a quick recap. It was a good day for the bulls, especially for the broader market. It was a good day because the index ended about 0.7% higher. At the Nifty level and the Sensex level, the initial gap up was sold into, but the market didn't really end in the red. The Nifty is ending with about 2 points gain. The Bank Nifty with about 26-point loss. The problem for the market today was a couple of heavyweights, HDFC Bank and Maruti. They sort of dragged the markets quite a bit. You could add an Infosys as well, maybe. So these 2 or 3 stocks, Tata Motors, ONGC, of course, Dr. Reddy's was the top loser, but the selling in Maruti and HDFC Bank would have just soured sentiment a wee bit. In terms of stocks that were higher today, Larsen & Toubro, we was talking about it. That was up 2.5%. Of course, the biggest gainer was Adani Ports, up about close to 3%. Apart from that, ICICI, Yes, Tata Steel, these were some of the big gainers in trade today. Coal India as well was higher. Hindustan Unilever is making a move again back towards its high of 1382 is its high, now at 1350 on Hindustan Unilever. So that stock also looked quite good. But it was all about the graphites and the rain industries of the world today.
Oh yeah, absolutely, Anuj. A couple of themes actually, interesting themes in the mid-cap market. You could pick on breweries or spirits, you could pick on fertilizers, you could pick on rice stocks. These are some of the plays that were evident. Okay, fine, let's start with carbon black and graphite, since those are the stocks that are on your screens. Again, fantastic gains. Philips Carbon 20% on the upside, graphite 10% circuit, HEG has been up, rain industries 10% circuit. Something like Himadri Chemicals that makes again one of the inputs that goes into graphite electrodes, that stock was up about 3.5% as well. So this entire commodity play continued to move smartly higher. Then, as I was just saying, fertilizers were a decent bet today. So Madras Fertilizers, NFL, RCF, most of these stocks anywhere between 5% to 10%, depending on which one you were picking up. So fertilizers looked good. Then let's move aside, and United Breweries has been on a high note. What buying in the last 15 minutes of trade? Tremendous buying on that stock, 6% up as we close down. And United Spirits and Radico Khaitan, they also had some gains coming through. Not as much as breweries though. But beyond that, let's not forget what was happening on a couple of other big interesting stocks. So Kajaria Ceramics, as Anuj earlier also flagged off, about a 2.5-3% up move by the time we closed out. Then Jet Airways is of course on a different orbit, different flight path of its own. About a 5% up move on Jet Airways as well. Bata was the other one that stood out. EIL saw some more follow-through buying. Decent day for some cement names, including the likes of India Cement and Heidelberg. And on the tech side, mid-cap tech side, today was a day of KPIT Tech, 52-week high on the stock, moving in style. So largely looking okay. Then there were the outliers. There was also the Fortis Healthcare for its own reasons. The stock was up about 4-5%. So you have to add that caveat. On the lower side, BEML, disappointment with the Parliament statement that the divestment will be pushed to the back burner for now at least. The ADAG pack was losing ground. Reliance Naval lost about 2%. Reliance Communications down almost 6%. But finally, as we're looking at the overall rates, Anuj, maybe not such a bad day for the mid-cap market.
No, not such a bad day at all. Just a word on Jet Airways. I have a feeling that the stock could enter F&O ban, Surabhi, tomorrow, because I was just looking at the open interest outstanding, which was at around 77 lakh shares. The futures today have added about 13 lakh shares. I haven't checked the options data, so it will be interesting to see, but a good chance that maybe it's close to entering the F&O ban. But let's take final thoughts then from our experts. Ashwani, what would be the key takeaway of a day like today, where we had flat move on the Nifty and Sensex, but decent outperformance for the mid caps?
So I don't think anything matters, because in a narrowing market, one day large cap indices will outperform, mid caps will do nothing. Next day, mid caps will outperform, indices will do nothing. So, you can't say that anything decisive has been said today. It's just that we are waiting for a trigger. Once that trigger happens, mid cap, small cap, large cap, everything goes in that direction. Since we are hanging on to the upper end of the range, it'll be more difficult moving higher than lower, because people are quite a bit long. So let's see which side the breakout comes, but you need to go with the side where the large caps are going, because finally mid caps follow large caps.
Okay, Mitesh, final thoughts from you. Now, looking at the way the indecision on at least the headline indices, what would be your trading bench tomorrow?
Yeah, so I think I've been maintaining a range-bound kind of outlook on the Nifty. That still remains 10,550, 350 being the broad counters, and 10,420 for me is the middle range pivot level. I think if we start getting below that, we will most likely head towards the lower end of the range. And if we stay above that, I think then we'll be trading with some kind of mild positive bias. So not much, but I think eventually a break beyond 10,550 something which will excite me, or a break below 10,350 something which I would, which would push me to take some short positions.
Okay. All right. On that note, gentlemen, we'll wind it up for today on Closing Bell. Thank you very much for being with us. Well, we need to take a quick break. On the other side, statewide bandh escalates in Maharashtra. More areas in Mumbai see blockages. We'll get you the latest. Welcome back. It's been a day of unease in Mumbai. Statewide bandh has escalated in parts of Maharashtra. Agitation is ongoing in several parts of the state and, of course, in the state capital as well. We've got Yashna joining in from outside the collector's office, where protesters have been trying to meet the city collector to seek a solution to the problem.
Well, because the call for Maharashtra bandh received a very lukewarm response from the ordinary man, from an ordinary Mumbaikar, it's being forced in a way on the city through the various protests which we are getting to see across the state of Maharashtra. In fact, on my way to this particular spot where I'm standing right now, which is around the Western Express Highway, I saw a couple of best buses being vandalized, being stopped abruptly on the road, which is again creating a lot of traffic problems on the routes leading to the Western Express Highway. Talking about the spot where I'm standing right now, this place is around the Western Express Highway. It's called Kherwadi, and I'm standing right outside the city collector's office. I was talking to some of the locals here, and they tell me that in the morning certain groups did come here, gathered and started protesting against the Bhima Koregaon incident. But again, eventually they were brushed off by the police, by the city authorities. And later on, just 30 to 45 minutes later, a few other groups came, they settled, and they've started protesting. The protests which you see currently are on behind me. In fact, there is a specific demand with which the people have gathered here. The protesters want to submit this particular letter which you see in my hands. They want to enter the city collector's office. They want to meet the city collector and submit this particular letter, a request letter with him seeking a probe and investigation in the Bhima Koregaon incident. The cops at this point of time not letting them enter the building premises, asking them to stay away from the gates. But clearly the situation remains far from being safe, far from being normal, and remains to be vulnerable at this point of time.
Okay, that was Yash just a while back outside the collector's office. Moving on, the power sector is in focus as statements from the power minister indicate that electricity tariffs across India are expected to rise by between 62 to 93 paise per kilowatt hour. This is going to be during the first year of upgrades that coal-fired power plants will have to take with respect to lowering emissions, whether it's sulfur or nitrogen. We caught up with Power Secretary Ajay Kumar Bhalla to understand how exactly companies are going to pass on the cost.
When the tenders are called by individual units, they will get the competitive bids, and when such a large scale technology will come in, it will definitely bring down the prices. So impact on tariff will actually be known when the bidding takes place. As of now, yes, I mean the investment will have to be made by the respective plants. There are two types of things. One is the cost plus model, where mostly central government plants and state generating utilities supply power on a tariff which is calculated by the regulator, what we call as the cost plus model. There, any additional cost incurred will be passed through. For the bid tariff, it will be treated as a change in law, and the regulator will consider the investments made and decide accordingly that how much of it will be passed through for looking at the recovery period of this investment. The phasing plan was prepared, you know, it is unit wise. The unit needs to be shut down to add a desulfurization unit for a few months. So we had to put it in a phased manner. So this is a 5-year time frame where more than 400 units will be acquiring this. So the tariff impact of this nature, one thing, for each plant it will not be there, and secondly it's over a period of time. In our plan, out of 196 gigawatt coal-based capacity, we have submitted that about 10,000 megawatts will be phased out as retirement. This is now all over the country, not NTPC. And remaining, some plants are already compliant. So it is about 170 gigawatt of plants which needs this desulfurization. And then some of those will need nitrogen emission control also.
Okay, that was the Power Secretary in conversation with us earlier. Moving on, sources are telling CNBC TV18 that the Rural Development Ministry has sought an allocation of 60,000 crores for Manrega in FY19. Anshu Sharma is joining in with the details. So seeking more money for Manrega, Anshu?
Budget allocation specifically for Rural Development Ministry was at 1.05 lakh crore for the current financial year, and out of that 48,000 crore was specifically allotted for the NREGS or National Rural Employment Guarantee Scheme of the government. We understand that 55,000 crore has already been spent on the National Rural Employment Guarantee Scheme this year, and the government is likely to seek 60,000 crore rupees for the next financial year. Some of the new initiatives taken by the government has been the direct benefit transfer, geotagging of the projects, electronic payment for the wages to workers, and seeding of Aadhaar. We understand that over 11 crore workers are actively working under NRGS, and 96% of payment is being done electronically. We also understand that since this is the year for election in 2018 as well as 2019, both for states, we expect that a lion's share will be given to such a social scheme under the centrally sponsored scheme by the government. We'll have to wait and watch out on February 1st. Back to you.
Okay, all right, Anshu, thank you for that. After 7 long years, Indian aviation industry is all set to see Indian aviation players making their mark overseas in 2018. At least 3 Indian airlines are ready with their international blueprint. Utkarsh Chaturvedi joins us for more details. Utkarsh, what are you picking up?
3 Indian airlines will aim for international skies this year. Go Air, Vistara and AirAsia India will all of them commence international operations in the year 2018. Let's speak about Go Air first. Now Go Air has been ready with its fleet and the norms you need to meet before you fly international. Go Air currently has a fleet of somewhere around 34 aircrafts, but due to the delay in the A320neo deliveries, they had postponed their plans. But at this point of time, what we are picking up is that it will be by February or March, Go Air will look to commence its first international flight to Maldives. Speaking about Vistara and AirAsia, both of them are looking to get their 20th aircraft. Now, for Vistara, it happens in May, and that is why what we are picking up is that it is by June or July that they will commence their international operation. As far as AirAsia India goes, they will be getting their 20th aircraft in October. Now what we are picking up is that it is either November or December, or maybe it might push on to the early 2019 when AirAsia India commences its operation. But this is after 2011 when Indigo started its international operations, is that Indian carriers once again are going and looking for international routes. Also remember that after the new norms, the new DGCA norms, the new aviation ministry norms of having only 20 aircrafts and not the 5-year clause has come into place, it will be the first time that all these 3 carriers will be aiming for the international operations. So clearly exciting times ahead for the Indian carriers, and let's see how all these 3 go when they hit the international routes.
All right, Utkarsh, thank you for that. On that note, another quick break. On the other side, we will have all the commodity market action with Manisha Gupta. Welcome back, and let's chat commodities now, where we are seeing a bit of a pause, and that's coming in because of the currency cues where the US dollar decline has stopped. There even is a bit of a green on the US dollar index ahead of the FOMC meeting minutes, and that seems to have pulled off the commodities slightly there. The major declines, of course, have been seen in the base metal prices, where you have everything from copper to nickel to zinc trading on the weaker side. It only is the lead prices trading slightly in positive, and that perhaps is because of the battery demand estimates in winters. But other than that, everything else is trading weak. Let's get in some more perspective of that on what really is happening in the global markets. Paul Gade is Senior Research Analyst at Bernstein Investment Research and Management, and he joins us on a phone line from London. Paul, hi, it's a pleasure to have you. What are you reading in the global markets today in sense of cues, and what is your sense on why the metals are trading weak today?
Look, I think, well, first of all, it's a pleasure to join you. Thank you very much for having me. Look, I think you have it exactly right when you're sort of talking about the sort of short-term, the immediate sort of pressure today. As you say, it's very much a sort of currency effect. What we're getting, of course, is that the inverse relationship between the dollar and commodities. Of course, a strong dollar or weak dollar directly impacts the cost structure of the industry. One of the biggest sort of cost components in the production of raw materials is, of course, the Chilean peso in the case of copper, the Brazilian real or the Australian dollar in the case of iron ore, and almost invariably you find this kind of short-term correction. However, I would sort of put that in the context of a broader strength that we've seen emerge over the course of 2017 that's much more related to the supply-demand fundamentals than it is the underlying sort of cost structures there for these base metals in particular. And there what we're seeing is a more favorable dynamic come into play. The supply-demand fundamentals have started to improve. The supply side is looking more and more constrained. The demand growth that we've seen from China post the reforms of 2014, 2015 has started to come back, and that sort of coincides with robust demand growth from the developed world. So all in all, what we're seeing is a situation where over the next couple of years, we expect the fundamentals to continue to improve, albeit we will always have the kind of short-term volatility that we see around specific news flow items or indeed, of course, sort of information around the US dollar.
Sure. So, Paul, what is your sense as we move forward from here? What metals would you want to pick on? What is your sense on what really could be an outperformer here? Because we definitely saw 2017 ending on a high note for copper prices. Would you pick that? Yeah.
Look, we've been very bullish on copper, since we sort of called the bottom of the cycle back in 2015, beginning of 2016. It was very clear that at that point in time the copper price was trading at an anomalously very low valuation, and that we'd see a significant recovery there. Look, I still think that we've got upside here in the copper price. I also think in the short term, despite the strength that we're seeing at the moment in the zinc price, we can expect to see some movement there. So we've got a favorable outlook for both of those metals into 2018, 2019, and actually beyond that, 2020. I mean, I think the fundamentals here, particularly in the case of copper, look very attractive. Zinc, we are starting to see some new supply come to the market. We are starting to see entrants being incentivized by the high zinc price to restart production, either at a capacity that has been idled in the case of Glencore, or things like New Century and the tailings retreatment project that captured some attention at the end of last year. But I still think we've got some room to run there in the zinc price in the immediate short term. I suppose the one commodity we'd be somewhat cautious about is aluminium here. There's been a lot of sort of positive hype around the supply side reforms in China, but we're somewhat skeptical about the durability of a sustained aluminium rally.
Well, that point is well taken, Paul. But while you did mention on what China is going through, and much of the cues, of course, come in from there because nearly 50% of consumption comes in from there. But what is your sense about the other consumer countries? How would you look at US now getting into infra spending, or the kind of data that has come in from Europe also seems supportive? Where do you see the next, spurt of demand coming in for the industrial metals?
I mean, look, you're absolutely right. 50% of it is China, and of course that has garnered all the headlines. I mean, at the 2014, 2015, there was all this narrative around, the peak metals at the end of metal demand growth that I think has been sort of put to bed now. Yes, infrastructure spending in the Western world, which is still a very significant consumer of all of these raw materials, I think can play a very significant role in increasing demand. I think what is very interesting is the coordination here of demand growth from both the developing world and the developed world. And it's the fact that you're getting that synchronization that is helping create, quite a positive demand growth picture for a number of these commodities. And you overlay that, as I say, with a supply side that is beginning, that is decelerating, and that starts to create tightness in a number of these markets and moves the price for these commodities closer to the reinvestment, to the incentive price level that you'd need to see in order to get people to commit capital back to the sector again.
Paul, a final question before I let you go. So what are the kind of percentage increases that we are expecting in these metals? I mean, 2017 saw gains between 20 to even 40% on the higher side. What are you putting out as a best number for this year?
Look, in the case of something like copper, I think, we might well be able to see similar kind of gains. I mean, if you look at what the zinc price did when it entered a genuine deficit situation, we saw, gains of in excess of that. I think that, we maybe not in 2018, but 2019, 2020, we could certainly expect to see that kind of strength in the copper price. Our price target is significantly ahead of where we are today at spot. We've got a sort of number of about $8,500 a ton. That's a long-term equilibrium fair value for copper. Versus what are we at, $7,200 a ton today. And of course, the issue is that with this being a cyclical industry, you always overshoot fair value on the way up, just as you undershoot fair value on the way down. Could we see copper prices at $10,000 a ton in the not too distant future? I think we could. And that's one of the reasons we like the metal.
Point taken, Paul. We'll let you go at that. Such a pleasure to speak to you on all of those metal space. Well, that's the view coming in from Paul Gate. Bullish on copper, not just for this year, but for 2019 and 2020 as well. Well, that's a long-term view, of course, coming in for the industrial metals. But how should you be trading all of those commodities today? And for this week, Ashish Shah of Sushil Finance joins us to tell us that. Ashish, first of all, on the metal space itself, the kind of correction or a pause that we have seen today, are you buying these dips, or would you see the correction, spilling itself over for the next couple of days as well?
I think we have just, the markets have just resumed after the Christmas and New Year break, and the profit taking was expected as we start in 2018. But I think this will be a short-term correction, profit taking because of the entire rally that has happened in base metals. However, the base metal pact, I think lead does look good, but out of that, I would still be buying nickel at current levels and dips to about 780 with a stop loss below the 770 mark for a target price of 850 to 900 on the higher side.
Ashish, also, what is your sense now for the gold and silver prices? Because we've seen a pause in US dollar. This is ahead of the FOMC meeting minutes. The markets are awaiting further data as well. Gold, silver have started the year positive, but do you see them holding these levels?
Gold has reached a significant level as far as on MCX is concerned, near the 29,200, 29,300. There seems to be a strong resistance near that level. I think the prices will correct, but overall broader term perspective, I'm bullish on silver as well as gold. So if one is looking from a long-term perspective, one can add silver to the basket compared to gold. But for the short term, expect some profit taking at current levels and then reinvest on gold near the 28,000 or 800 or 29,000 on the lower side.
You know, a lot of people really seem to be betting a lot on silver because of the kind of pressure that we saw coming in for that for the second half of 2017. It has started on a good note. We've seen a 5-week highs yesterday, unable to hold around those levels, 0.5% down in the global markets right now. What are your ranges coming in for the Indian markets now?
So I think silver one has to look as a broader time frame, whether it is buying at current levels or even as dip, more like a trading, not as a trading product, but more as an investment product.
Sure.
This is the only commodity which has not yet performed or given gains over the last entire metal space rally or the industrial metal space rally. So I think my worst case downside could be anything near between the 30 and 34,000 for the coming 3 to 6 months.
Okay.
But on the higher side, I'm expecting prices to be around 47 to 50 from current levels.
All right, we will keep an eye on those numbers. Ashish, thank you so much for joining us, and thank you for your strategies as well on how to trade all of those commodities in the Indian market. With that, it's a wrap up on this edition of Closing Bell. All the action in After the Bell is coming up next.